Hi, everyone. This is Christine Kopr with your market update for April 2025. The March numbers are in, and we're going to take a look and see how we ended up at the end of March. Now, keep in mind, we are discussing where things ended off at the end of the month last month. I am going to touch on where sales are sitting today, the Bank of Canada interest rate announcement, and what's happening in the market overall. So let's get right to it. Every month, I like to take a look at this table because it gives us an overall perspective of what's happening in the market. Think about it as the broad index, the S&P 500 or whatever stock market. It's a general overlook on the market because, of course, each market segment is performing a bit differently and in different pockets. So this is Metro Vancouver. This covers Vancouver, Whistler, all the way out to Maple Ridge. So it gives you a high-level overview of what's happening. And we're going to take a look at what's happening right now, what it could look like if the trends continue on into next month. And we're going to take a look at the past just to see how muted our sales activity is. Although I must admit, here in the month of March and in the beginning of April, we have had some transactions happen and some more activity showing up. I mean, we truly are finally hitting that spring market. It's not raining all the time. The flowers are out blooming, which is really beautiful. And I think a lot of people, when they're thinking about shopping, it's this time of year. And this is also the time of year where more listings come onto the market when property shows a lot better. So those are all the dynamics that we look for. Spring market is truly March, April, May. That is the most active part of our year. The next part of the year is the fall, September, October, and into November. So this is where you're going to see the bulk of the transactions happen, and you'll see that throughout the sales activity seasonally. So let's take a look at how March fared. I was very pleased that we hit 2,091 sales. Under 2,000 sales is quite a bit muted. Now, 2,000 sales is also quite low. In fact, we're at 37% below the 10-year average for this month. So it gives you an idea of where we're at with how slow things are. And what we're going to do is take a look and see how things were going at the end of last year to show you the momentum that was ramping up. And if you can see here, March at 2,091 was higher than February 1,827, which was still quite low. It was also in the 30s%, the 10-year average. And when we take a look at the end of 2024, you can see December, that's always a quiet month, but you can see we were starting to go from these lower numbers. We had a decent spring, but it was quiet and again, muted August, September, and it was only October where sales really started to pick up in over the 2000s, and particularly well in October. 2,600 sales was fantastic. Even 2,100 sales in November and December was much stronger. So as we've come into this new year in 2025, the situation with the tariffs is impacting the spring market. And I would argue that the snow that we had in early February also put a damper on things, and the weather just hasn't really been spring market yet. And that might help with the muted activity come back to the market and show a little bit more resilience, which might be a little bit more of what we're starting to feel now in April. However, I suspect we are going to still see quite muted sales. Coming back to those sales, we're looking at 2,091 sales. That was up 14% month over month, down 13% year over year. So you can see that this time over last year, there was a lot more activity. And our activity over the 10-year is just low, very, very low considering where things are at today, and that interest rates are way off their peak and in a much more manageable range, which was what was predominantly the story that was keeping the activity lower over the last couple of years. New listings. These are the homes that get listed in each month. We had 6,455 new listings come on in the month of March, which was very interesting because we're seeing an abundance of listings coming on each month. And that was up month over month and 29% up year over year. So if you remember, our sales are down substantially year over year, but our new listings are up. And that's not always an issue if there's enough sales to deal with the amount of listings coming on the market, which we're going to discuss in just a moment. So 6,455 sales in the month of March was also up 16% above the 10-year average. So that's more than we're accustomed to in this 10-year average period of time. Total active listings, the amount of homes that were available at the end of March for purchase was 14,546. That was up 14% month over month and up 38% year over year. So a substantial increase in overall listings, while of course our sales are muted year over year. And in fact, that total inventory is 45% above the 10-year average. You may have been hearing the message from the Greater Vancouver realtors that this is a market made for buyers, and we just don't know where they are. And we're going to discuss the key points of like why this actually makes such an excellent market for buyers. And I know people feel like, oh, you guys say that all the time. But in this case, when you take a look at the overall available inventory, the total interest rates, and just the market environment in terms of the ability to be able to buy property, you have the inventory available at decent interest rates, less competition, but the activity is muted. And I guess that's probably due to the fact that although they always say buy when no one else is buying, it also takes some courage to take action in a time when properties and prices aren't always going up. It's obviously a lot easier to take action in that time, but we all know the money is made when the market is muted and there's opportunities abound. Now, the stat that I always like to look at is months of inventory. So at the end of March, we ended up with 7 months of inventory. For those of you that are just tuning in for the first time, months of inventory, it helps you understand supply and demand. So if we have too much inventory for the demand, then we'll have a downward pressure on prices. If there's just not enough inventory for the amount of demand, we'll have upward pressure on prices. Between 4 and 6 months of inventory is considered a balanced market. 6 months and above is considered a buyer's market. There is more inventory than there is demand, creating downward pressure on prices. And 4 months and below is considered a seller's market, where there's just not enough inventory to meet the demand and it has upward pressure on pricing. So you can see we've been in this steady 7 months of inventory, which historically we just don't see in Vancouver. In fact, when it shows up, just as fast as it showed up, it would disappear. So over the last 5 years, there have been these opportunities where there's been weaknesses in the marketplace that you can take advantage of. It usually doesn't hang around. And this type of inventory is also not that common either in terms of total inventory. Now, of course, if you have extremely strong sales, that total inventory can be completely irrelevant because your months of inventory, if we had double the amount of sales, I mean, we'd have half the months of inventory. All of this data needs to be taken into perspective, but we are sitting in this more of a balanced and let's just say it more of a buyer's market territory for a lot of the overall market, not all product, but the market overall. Interestingly enough, our benchmark price came in at 1.191, so just under $1.2 million last month. That was up 0.5% month over month, but also down 0.5% year over year. So while we had some gains last year, those ones have been kind of trickling away, and now we're sitting at 1.191, as you can see, up from 1.85 last year. So let's put this all into perspective. The total amount of inventory, sales in general, like 2,000 sales is that kind of bare minimum we want to see with respect to activity, because there's one other period of time, which was 2019, where things were really muted. And we'll kind of scroll back to take a look. You can actually see a whole year. You have 2024. You can see we had a really decent spring, over 2,000 sales. We had 2,400 in March, 2,800 in April, 2,700 in May. This is more typical of our 10-year average. And in fact, I would say this is more in line with our typical sales cycle, although in some of the really hot years, we far exceeded these numbers with 4,000 to 5,000 sales per month. And you can see that months of inventory were very much around that seller's market inventory late last year. It started to expand at the end of last year. And you can see the fall started this way, like the summer became very muted. And that's when there was this accumulation over time. We had hold in the interest rates, and then they started to come down. But, there's this bit of a lag in the market. And then you could finally see that these few interest rate decreases started to increase this activity and bring back some life to the market. To have a stronger October than March in the spring is very unusual. So it shows you that the market demand is actually there. It's probably just sitting on the sidelines right now due to the uncertainty coming from the tariff situation and how that is going to impact the Canadian economy. And of course, buyer sentiment moving forward. And you can also see that, we've been sitting around in the 1.9s here. We were up at 1.2 and even lower at the end of last year. So where we're sitting at in the benchmark today is actually quite decent. But if you want to go back to the COVID, my charts looked a little bit different back then. We had very strong spring in COVID. It went almost dead here, April, May. You can see that decrease in the price there. And then we had extremely strong sales after that. But nowhere did we have, 15,000 homes of inventory. But the year prior in 2019, which was the worst year since this year in some of the recent market activity, was 2019. And you can see we had only 1,700 sales, 1,400 sales, 1,800 sales. This was very muted. We were starting to inch up into that higher, 14,000, 15,000 total active listings. And, we were in the 7 months of inventory, touching on 8 months of inventory. What happened is the activity started to pick up, and I think interest rates started to get a little bit better, and we started to chew through that total inventory, and that eventually had upward pressure on prices. And I remember coming into COVID, we knew we had a strong market, and then COVID just took it over the hump and next level. Looking back, you can see that the activity that we have today is quite muted. What happens if this continues moving forward? Well, this is where we're at today for April sales. We're sitting at 1,090 for sales, call it 1,100, and today's April 15th. So let's pretend we double this number by the end of the month. We'd be looking at about 2,200 sales. We've listed 3,700 sales. So let's pretend by the end of the month, we double that and we'll have about 7,400 listings. So what could those numbers look like? Well, for ease of conversation, I dropped in 2,000 sales into the month of April. I'm not worried about the listings right now because today I currently have 16,269 active listings on the real estate board of Greater Vancouver. If we only do 2,000 sales, then we are going to up into that 8.1 months of inventory. If we don't have more excitement coming into the market and we continue to have the listings that, we're anticipating for the spring market, we are going to continue into an environment that is going to have some downward pressure on prices. The good news is that prices have held pretty steady. They've been flat or losing about a half a point or so per month. While there's been, some downward pressure on prices, it's not exacerbated. So prices are hanging in relatively well in this perspective. So we're definitely going to be keeping an eye out for that as we move forward into the rest of the year, and we'll see what happens. Why would we say that today is a great market for buyers to be getting involved with? Let's take a look at some of the differences. At peak interest rates, we had 5.49% versus today at 3.84. Now, this is from Rate Hub. These are going to be the best market rates, maybe not all the rates that you can get. I would say that rates peaked over 6% at the peak, but it just shows you how far we've come down just in 2 years, a year and a half with respect to interest rate levels. And while we do have the inventory accumulating, you can see that prices have remained relatively strong. We're only down 5.5% from the peak of April of 2022, which was 1.26 for that benchmark. And now we're sitting at 1.19. Where things are totally different is the inventory. The total active listings is up 160%. We went from a low in December of 2021 of 5,588 total available listings on the market to having over 14,000 homes available at the end of March. Now, if you were thinking about buying back in 2020, 2021, 2022, and much of 2023, the first half of 2023, you were probably in a multiple offer frenzy. There was no time, there was limited options, and if you saw that something that you liked, most likely you're going to be going into a multiple offer, subject free often situation. So today, with this ample inventory, it really gives buyers and home sellers who are trying to sell their homes and move into a different home have the options to make those transitions. So that is what is fantastic is you have the inventory, you have decent interest rates, and you do have some market activity. It is not a strong seller's market by any stretch of the imagination, but there is enough activity to try to make these deals come together, assuming you are priced for market. Of course, at this point of time, you have a lot of competing inventory, which means as a seller, you must price competitively, you must prepare and be strategic in how you execute. You got to be sharp and you have to have standout product. So, of course, in an environment where you have a lot of competing inventory, you have to have excellent presentation, you have to have access to your property, and you have to price appropriately for market and price sharply to stand out from all the other listings in order to attract a deal. Because, of course, buyers are going to be looking for good deals. They're looking at a lot of property, so they have a really good understanding of what market value is, and they will act when they find the right property. And we're seeing it. The activity is happening. So one of my key messages would be don't overprice in this market. Now, just taking a look back, will 2025 be a rock stellar year? I don't know. In fact, my speculation is that we'll be lucky currently to see the level of total sales that we had in 2024, which just eked out ahead of 2023 and ahead of 2019. And of course, coming out of 2018, which was another very quiet year. And that was the year that the stress test was introduced after all of the other taxes that were introduced and really had an impact and reshaped our marketplace. And then took off with COVID. And then since then, the interest rate hikes. And here we are today. So let's break it down for Vancouver West and Vancouver East. Here we're going to take a look at Vancouver West. Detached homes, you're sitting at 3.451. You're down 0.4% month over month. So you're basically flat. You're sitting at 13 months of inventory. So definitely a buyer's market. But you can see that's really tightened up from the month before. You're down 28% month over month. So heading in the right direction to tighten up that overall inventory, but you are in a buyer's market. Sales sitting at 52 last month, down 18% year over year in terms of level of activity. And your inventory sitting at 668 homes, which is up 21% year over year. But look at that. You can see that the months of inventory is starting to tighten up in this market segment. Townhomes on the west side, 1.478, down 1% month over month. Your months of inventory is sitting at 8, tightened up, down from 10 in February, so down 22% month over month. Sales are at 38 or down 21% year over year. So you can see the activity isn't as strong as last year, and your inventory is up 27% year over year at 295. Westside condos, 849, up in terms of price month over month, 1.2%. So that's starting to be a performing market. A lot of pre-sale newer product in that market, which sells for a higher premium. March, you're sitting at 7% months of inventory, down from 8 months or down 13%. Sales are at 292. Down only 3% year over year. This particular segment is hanging in there comparable to activity seen last year. Total inventory is 1,952, which is up 26% year over year. And here is your sales to actives ratio, which is a lot tighter than our months of inventory. Under 12% is considered your buyer's market. 22% and above is your seller's market. So detached is in your buyer's market right here. Townhomes are at 13%, so just into that balanced market. And your condos are at 15%, just sitting in that balanced market. Your townhomes are at 12.9%, just coming out of that buyer's market into balanced. And your detached homes are sitting at just at 8% in the buyer's market. Vancouver East detached is sitting at 1.854. Vancouver East detached is sitting at 1.854, down 0.4% month over month. MOI or months of inventory is 9, down from 10%, so down from 10, so tightening up month over month. Your sales are down 12% year over year, but you still hit 69 sales, so not as strong as last year, but hanging in there. And your inventory, though, is up 39% with 607 homes on the market. Now, remember, there's a lot of land assembly listed in this market as well, so just keep that in mind. Not all listings are true listings. In Vancouver East, townhomes, 1.159, flat. Months of inventory is at 4. So this is sitting on the cusp of a seller's market. Sales are 28, and that's up 4% year over year. So this segment is actually performing better than last year. And of course, your inventory is sitting at 113, up 7% from the year before. Eastside condos, 702,000, up in price month over month, 1.7%. So there's a good little uptick there. 5 months of inventory. So sitting in that balanced market just on top of the seller's market at 4 months of inventory, 105 sales, down 17% year over year. So a little bit more muted in that segment year over year. And your inventory is up 18% at 550 homes available. And for Vancouver East, here we are. So in the seller's market, you have those townhomes at about 25%. So this is now the sales to actives ratio versus the months of inventory. Balanced market conditions for your condos just outside of that, 20% just dropping in to that balanced market out of a seller's market, and detached is sitting at 11%, just out of balanced into that buyer's market. So you can see things overall are performing. I mean, definitely not old peak conditions, but off we go, not hanging a ton out in that buyer's market. Although I would say that the market in some ways is behaving that way. So today we had our Bank of Canada rate announcement, and they've decided to hold the rate steady. So that was interesting. I'm not sure a lot of people were expecting that. I think with the trade war and the weakening economy, a lot of maybe consumers of the market were anticipating another decrease in the Bank of Canada overnight rate. But the challenge that they're finding is that they have two opposing forces. They've got this downward pressure on the economic situation. We're seeing just less trade. I think we all agree we're in a per capita recession right now. You can see that there's rising unemployment in Canada, falling oil prices due to either weakening demand or speculation of weakening demand, lower consumer business confidence. We're definitely seeing lower confidence than ever. But we also are going to see the elimination of the carbon tax, which is going to lower headline inflation for the next 12 months until we get through a whole cycle without that carbon tax factored into prices. So that's going to shift things slightly. But usually the Bank of Canada will decrease the interest rates when we have downward pressures on the economy, trying to boost the activity by lowering the cost of borrowing, incentivizing businesses to get out there and buyers to get out there to participate in the economy by keeping their borrowing costs low. The challenge that we're having is with the tariff situation is we have an inflationary pressure on our economy due to these tariffs and this trade war where everything's going to cost more. The stuff that we bring in, and then of course, all the stuff that we export is more expensive in the US. People don't buy it, then our companies suffer, and off you go. You have the results of a trade war. You also have this challenge with the supply chain that can also increase prices, therefore increasing inflation, and scarcity pricing. Now that you can't get these items, the producers that can produce can elevate their prices because now there's less competition. And that is what the Bank of Canada is having challenges with right now. So they've decided to keep their bank rate steady. So what that means for your mortgage is nothing. If you have a variable rate mortgage, nothing's changed. And your fixed rate mortgages are influenced by the bond market. And of course, in all of this, we've had a wild swing in the bond market. You can see just the other day, bond market went up by like 30 beeps. In some cases, here we're at 2.83. We were just at 2.5. I mean, it's wild. And just to think that, back in January, we were sitting at over 3% in the bond market, which influences those 3-year and 5-year fixed rates. We have been encouraging our clients, whether they're renewing soon or getting a new mortgage, to lock in your rate holds now, because we knew that there was some downward pressure. We were having these rate decreases, but there could be inflation or inflationary concerns that show up with, the US Canadian dollar issue. And then, of course, now as the tariff war has become more prevalent, creating potential inflation down the line, which could then actually start to see interest rates go up, which obviously would impact your borrowing costs. So definitely get in touch with a mortgage broker if you're renewing or buying anytime soon. And with that, the message is that there is activity out there. We do have active buyers. Some buyers are on the sidelines. We've definitely have seen clients that have been directly impacted by this economic situation or just have some uncertainty. We have other clients who are looking at it as a great opportunity to take advantage of the situation, or Canadians coming abroad with their US dollars. There are deals getting done. There have been more deals getting done lately. So we're having a little bit more of that boost of activity. So I think if you're thinking about selling, now is an excellent time to be positioning and getting onto the market, pricing appropriately. And buyers, this could be a great opportunity. Could there be more downward pressure on pricing in the future? Absolutely. But one thing we've come to learn is that this trade situation is very unpredictable, and it could be resolved in a matter of time, or it will work itself out. And this might be some of the best opportunities here in the short to midterm to pick up an excellent, high quality property at a great, fair price. I'm Christine Kopr with Sotheby's Realty in Vancouver, BC. That's our market update. Always love connecting with you. please make sure to reach out to us with any questions that you have, and always feel welcome to connect for a complimentary consultation. Take care and see you next month.